You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NYFI.
Hey everyone, you're listening to the Supply Chain Secrets Podcast. I'm your co-host Caroline Weaver, and with me is Lars Jensen. Lars, how you doing?
Hey, thanks. Thanks for having me again.
Calling in from Copenhagen?
Yes, indeed I am.
Awesome. On the home turf.
Home turf, first day of summer. What's not to like?
Yeah, I'm ready for some summer weather here. It'll be, in the hundreds in Austin, but it's kind of nice at least. All right, let's get started with the market updates. What do you have for me this week?
Oh, I have skyrocketing spot rates as far as the eye can see, I was about to say.
Yep.
And we shouldn't really be surprised, right? This is the confluence of carriers still struggling to get enough capacity in and the massive boom of cargo coming out of China. If we start with the reading coming out of the NYFI index, what we have seen now, if we compare to just pre-tariff pause, we are up about 28% on the NYFI from China to US, and that's actually both for 20-foot and 40-foot containers. There was a little bit of a mismatch about a week or so ago where the 40-foot rate was increasing faster than the 20-foot rate. But this week we saw the opposite move. So now they're actually in balance again. So the pressure, no matter what equipment type you're using, is still exactly the same. Now, here's the interesting part. If we talk about this in dollars and cents, on the 40-footers, we are up a bit more than $500 per FFE. And this, under normal market circumstances, would be a lot. Right now, it might strike people saying, hang on a second, I've seen a lot more, and you likely have. Because this is where, keep in mind, the NYFI can only be measured when cargo has been booked and loaded. Mm-hmm. Whereas if we compare to, let's take another benchmark out there, for example, the SCFI, that I think a lot of people are also aware of. The SCFI in just the last week alone is up almost $2,000 per FFE. That's in the last week alone. But keep in mind, these are quoted rates, which means, strictly speaking, we know that these rates have been quoted. They are likely also genuine quotes. But on one hand, we don't know if anybody has actually booked at that high end. They might have booked at other quotes that are lower than that. I wouldn't think it's the case, but you can also argue it might be that no carriers have actually accepted a lot of cargo because they wanted more. That's probably not the situation right now, but you don't know until cargo has actually been booked and shipped, which means we should expect the NYFI index to show similar types of massive increases over the next couple of weeks. And for anybody hoping that this is the end of it, it might not be. If you look at some of the peak season surcharge announcements, ERI announcements that's coming from the carriers in June, so that is beyond what has already been measured. Depending on which carrier you're looking at, this ranges from $2,000 to $4,000 per FFE. That's on top of where we are now if the carriers are successful. This would bring us up to the US West Coast, not quite up to the $10,000 per FFE level, but we would be approaching that if the carriers are actually successful over June. And again, this brings us back to basically the peak level scenario we also saw unfold last year.
Yeah, so these are like the same rates, right? More or less.
Yeah, exactly. So that's also why I say, it's skyrocketing rates. This was specifically on the China to US West Coast. But what I also find interesting is if you look at trades like Asia to West Coast South America, Asia to East Coast South America, they have also shown massively high increases with rates up around 100% compared to last week if you look at the Shanghai rates. Asia-Europe rates are not going up as rapidly, but they're definitely beginning to take a turn up, now up around 40% compared to just a few weeks ago. So yes, of course, China-US is where everybody's focus is because of the tariff war. But make no mistake, this is a more widespread phenomenon overall in terms of upward pressure. And the pressure on Asia to South America, the pressure on Asia-Europe, cannot in itself be explained with the US trade war because there are no tariffs involved, changes there. This could be a combination of a couple of factors. One could be pulling some of the capacity out to put it back into Pacific. Some of this could simply be very strong demand move. Unfortunately, we don't have strong data on that part yet. But skyrocketing rates in the Pacific, but also strong growth outside of anything that's directly impacted by the US trade war.
Interesting. I guess it's not entirely unexpected news, but these rate climbs are kind of steep.
Exactly. And you can say, in what is becoming a weekly feature, what is new on the front of tariffs? And as it seems every week, there is news again. Two pieces of news came in the past week since we had our last podcast, and I think most have seen both of them. The first one would be a court ruling that the tariffs were unlawful and they should be basically rolled back within 10 calendar days. And then a stay on that injunction, which basically means that, yes, the government can continue with the practice as is until the appeal is then proceeding through the judicial system. So for all practical intents and purposes, the tariff rules are still de facto in effect while the appeal works its way through. For some, this might sound a little bit confusing in terms of what on earth is going on. Let me try to simplify it as much as possible. The bottom line, at least, and this is US specific, right? The bottom line is, according to the Constitution, the president cannot do tariffs. That is very specifically mentioned. It's only Congress that can do that. However, and there is a very important however, Congress have over the decades passed a number of different laws where they're delegating some of their authority to make tariffs to the president. And if the preconditions for those laws are in place, then the president can do tariffs. And in the current situation, all of these reciprocal tariffs are done under one specific set of rules. You might have heard the acronym IEEPA, that's basically the one. And the president is saying because there is basically a threat to the US, I think is the phrasing, then he's allowed to use these powers and he's allowed to do tariffs. And that's where the 10% of all countries came from. That's where the 145% of China came from. This is where the reciprocal tariffs came from. It's where all of these things came from. And what the court then ruled back on Wednesday was, this is not within the scope of the IEEPA rules. You are not allowed to do this. This was, of course, appealed, and that's why at the moment we are very literally in a situation where a U.S. importer do not know whether or not at the end of the day they're going to have to pay the tariffs. In practical terms right now, they have to, because there's a stay on this injunction. So even if the court has now ruled no, because of the stay, we have to wait to see what happens in the appeals. And it's almost a given, no matter what happens in the appeals, this will continue to the Supreme Court. So this will not take days or weeks, this will likely take months. And until that is settled, a U.S. importer de facto do not know whether they will pay tariffs or not. Right now, in terms of cash flow, they will of course have to pay the tariffs. But it might then be X number of months down the line that they can get all of this refunded if at the end of the day, for example, the Supreme Court rules that this was not allowed. From a supply chain perspective, this is a very, very difficult situation for the importers to be in. How on earth do you handle this situation? Because it's not small money we're talking about. We're talking 10% on everything across the board. We're talking 30% on everything from China. We're talking 25% on not all, but a substantial number of goods from Mexico and Canada. And this is going to stay in limbo for months. Mm-hmm. You might then also have seen headlines out there that if the court does not allow this, the administration have other options. And of course they have other options too. Either they can use other powers that is given to the president by Congress, or of course, if you can get Congress on board and get Congress to do tariffs, they can do any tariffs they want. I mean, that's their prerogative. So even if this is shut down by the judicial system, tariffs might still be on, but that cannot be retroactively. So we still have this mess in this interim period where nobody really knows, are we going to pay or are we not going to pay? Making matters even more confusing, as if this one was not confusing enough, is the taxes on steel, aluminum, on car parts, cars. That is under a completely different set of rules. So that is not impacted by this court ruling. So the 25% on steel, aluminum, cars and car parts still stands. We have then heard a statement from President Trump that he's going to increase steel and aluminum tariffs to 50%. So far, that is just a political statement. It has not been enacted into law just yet. And maybe taking this all the way down, what does this mean for the supply chain? I mean, we have already discussed how the pause on the tariffs in themselves act as an incentive for U.S. importers to import as much and as fast as possible before the 90-day deadline. This new wrinkle where you actually don't know whether you're going to pay or not at all might, at least if you have issues around your cash flow, act as an impetus to maybe ship a lot less than you envisioned. Because why would I want to have a lot of cash flow tied up with US Customs when I don't know whether that is necessary or not? So this could act as a little bit of brake on that demand surge that might be coming. But I definitely do not envy the US importers trying to navigate this.
No, and it's tough even doing this podcast because every week things are changing so much and you're having to remember the cumulative effects and like, okay, what's now being negated based on the court rulings. It's a lot to keep up with. But I think what you mentioned earlier, you might have some logistics teams direct quoting you when they're getting asked, what should we be doing with the tariffs? I don't know. Like Lars said it too. I don't know what we should be doing. It's hard to tell.
Exactly. The situation we're in now, I think we've used the word several times, unprecedented, but every week it seems to add another layer of unprecedented on top.
And you're having to become experts at these laws that have been in place for decades and various government organizations and what power do they and don't they have. And It's really hard to keep up with this.
It's hard to keep up with, and also because no matter how much anyone is an expert, the reality is also if you are trying to use a law in a new way, and it hasn't been tried at the courts yet, until it has been tried at the courts and potentially run its appeals, you actually don't necessarily know for 100% sure what is right and what is wrong.
Right. One of the interesting things that I was reading is that the court, I think it's based out of New York, but one of the judges was appointed by Obama and another one was appointed by Trump. So it's kind of interesting to see that dynamic play out.
Yes.
Against the tariffs that he
and the third one was one appointed by Reagan, so that's clearly a judge that's been on for quite a while.
Right. My thoughts exactly. Well, what do we think this, how might this impact reliability? And what has it been looking like lately? Good, bad?
In terms of reliability continued to improve. We had the new Sea Intelligence numbers come out here actually yesterday. And from a global perspective, reliability continued to climb up. Now, mind you, this is for all arrivals in April, so all vessels that arrived there. Globally, we're still on an upward trajectory, almost 58%. Yes, that's not a good number, but it's definitely an improvement. We haven't seen anything that high since November 23. So we are finally back to levels at least before the Red Sea impacted everything. That's kind of the good news. If you look at some of the measurements they have for the specific vessels on the new services by the new alliances, they are still performing quite well. And the one that has a target out there, that is the Gemini. Overall Gemini average is also still at 90% in line with what they promised. And keep in mind, they didn't actually promise it right out of the gate. That doesn't mean they're above 90% on all trade lanes. On some trade lanes like Pacific, they're above the 90 level. On some trade lanes like Asia, Europe, they're a little bit below the target. It depends a little bit on trade lane. But overall, the reliability elements generally look good in terms of vessel arrivals. And then you might hear sort of a but coming, and there is a slight but. Because this measures are the vessels coming on time. But try to picture this. You have a 20,000 TEU vessel that is late, and you got a 500 TEU vessel that is on time. Then the vessels are 50% on time. But almost 100% of the cargo is late because almost all of it is on the big ship. So what if you try to break this down and instead of just looking at the vessels, then I try to weigh the reliability against the actual number of TEU that is shipped on the different trade lanes? What you have then seen in recent months is that this is declining. So global reliability is indeed increasing, but it's doing so in a way that the increases tend to be concentrated in smaller trades, whereas the genuinely large trades are more negatively impacted, or at least not improving. So what the shippers with their cargo are experiencing might not be completely in line with what the overall number is stating, because there are proportionally more containers moving on trade lanes that are not improving as much. And I think this is where, for example, some of the tariffs come in, because some of the large trades are US-specific trades.
So what is the baseline definition for schedule reliability? And is it the same between carriers?
At the baseline, this is the methodology I'm using the numbers from Sea Intelligence, and the baseline methodology there is they look at what are the schedules offered up by the carriers, and many carriers don't offer schedules by the hour, they offer them by the calendar day. So the definition is if the vessel arrives even within plus or minus one calendar day, it is still noted as being on time.
So then is it the pro forma schedule, like the very first time it's published?
Yeah, as far off the top of my head, as far as I recall, don't crucify me. I'm talking also to all the listeners out there if I can't remember it completely exactly. But as far as I recall, this is locked 2-3 weeks before or so. So last minute adjustments as a carrier, you could do a last-minute adjustment and always claim you're on time. Obviously, that doesn't work.
Yeah, okay. Yeah, that's interesting to hear. So the average is overall better than it has been. Is there
Yes.
a large discrepancy between the carriers, or like is there one that's outperforming the others?
There's always a large discrepancy. You say that might be a good topic for a podcast also later on, because you have to distinguish between, not only is a big difference between the carriers, but there's a big difference between what I would call niche carriers and the global carriers. So if you're a global carrier, you're measured on a lot of different trade lanes at the same time. But you have some niche carriers that might only operate one or two services and only measured on those. And what you tend to see there is an enormous spread amongst the niche carriers. Basically, every month you always have a few niche carriers that might be hitting 100% reliability. And every time it also seems you have niche carriers that are now not necessarily at zero, but close to. So you got an enormous spread once you start to look at the niche carriers.
This is kind of a tangential question maybe, but if you're a vessel operator going into a port, is it prioritized in various ways? Like might the smaller, like more niche carriers have a harder time unloading cargo if there's port congestion?
The honest answer is it depends. If you're going into a third-party facility, they will likely look at, do you have a scheduled agreement and are you meeting your actual slot that you were promised? You might get your slot. It might also be the third party says, well, we're just backed up, so everybody's going to have to wait. It's first come, first serve. That is also an option. Then you also have a different variation. Again, take the Gemini as an example. One of the reasons they were promising 90% is at least the major ports on their network tend to be owned and operated by themselves, which means they can prioritize. So the Gemini vessels that are arriving will get priority and some of their own other vessels will then be shuffled further down the queue so they can maintain a higher reliability on their Gemini services, but potentially at the expense of a lowered reliability on some of their other services. So
Okay.
Do they get priority or not? Well, that depends on which port, which terminal we're talking about.
Yeah, obviously the more vertically integrated you are, you have a better chance at meeting that reliability number. And then what about capacity? Where are we at right now with that? Obviously things are changing quickly with it.
They are indeed changing quickly, and I think this is one of the ones where if we fail to confuse all our listeners in the initial part with the tariffs, let's take another stab at confusing everybody. Because most of the headlines has basically been the rapid injection of capacity we've seen on the Pacific, especially let's focus on Asia to US West Coast. The rapid injection of new capacity, especially over the last week. And has that been the case? Absolutely yes. Now comes the interesting question. How big is that capacity injection? And we prepared a small graph we can share with everybody. These are based on Sea Intelligence capacity data. Now let me walk you through this one. This is the average TEU operated per week in the month of June. The first one is June 2024. So in June 2024, exactly a year ago, the carriers operated on average 320,000 TEU per week from Asia to US West Coast. The next one is before the trade war. So this is the look at the beginning of April, just before the trade war was announced. So this is what the carriers had planned for the month of June, based on all the new services, all the new alliances, everything that was in line. At that point, the carriers were planning just above 370,000 TEU, a massive increase compared to last year. Then we had the tariffs, and the carriers were rapidly blanking sailings. So that's the third bar here called before tariff pause. So this is just before the tariff pause was announced, and the carriers were at the maximum level of planned blank sailings in June. So now the carriers suddenly were planning only a bit over 330,000 TEU. Now, especially over the last week, most of this jump from before tariff pause to now is actually something that has been announced over the last week alone. The carriers are now planning almost 380,000 TEU. And this is where it becomes interesting. Is this a massive increase or not? Well, if I compare to just a few weeks ago, absolutely yes. Massive injection of capacity. We're up 16% in more or less just a week. If, on the other hand, I compare to the situation in early April, we are marginally above what was the baseline plan. You can then argue that carriers always, to some degree, end up blanking some sailings, no matter what, for whatever reason. So even in the absence of the trade war, they would likely not have deployed a full 370,000. But it's still interesting. What we call a massive capacity injection is basically just a reversal to what the plan was before the trade war. Even more interesting if we compare to the same month a year ago. You can see how much of an increase that is. In percentage terms, we're talking an 18% increase. And that's 18% added capacity for the entire month of June. This is an enormous injection. And that brings us over to another issue. What will that do to US West Coast ports? Well, if you had asked me back in the beginning of April, again before the trade war, said, look at all this capacity planned for June, I would have seriously questioned whether all of that capacity could realistically be filled. So the carriers might blank some sailings and we were not going to see an 18% year-on-year jump. That would seem somewhat unrealistic. That is no longer the case. With the current spike in volumes out of China, again the tariff-driven impact, there is suddenly a very real chance that the capacity the carriers are now planning for June can actually be filled. If this is filled, this also means that the ports over on the US West Coast will now also see an 18% year-on-year increase in the volumes they need to handle. And earlier today, I went back and looked at what were the handling numbers in ports of Los Angeles and ports of Long Beach a year ago. What would happen if this was to increase 18%? If this was to increase 18%, we're looking at handling volumes that not only exceed the highest volume we saw at any point in 2024 by quite a stretch, it also exceeds any maximum we even saw during the pandemic period. So if this capacity can actually be filled, which suddenly there is a realistic chance of, you're going to see a significant increase in the record of how many import TEUs both Los Angeles and Long Beach has to handle. It appears from statements from the ports that they are confident that they can handle it. If they can, that would be great. But I would say, well, maybe color me skeptical if the carriers actually fill this capacity and it comes over.
Do you think there's going to be any impact given the court ruling that we had this last week on capacity changes, or do you think it kind of just nets out to nothing for right now?
It's very, very hard to say. That's also why I say that this might have an impetus on lowering demand. But the key here is part of the demand that's being pushed through the system right now is to quite a degree cargo that was already produced and ready to go. Whereas the impact of the court ruling, that might be to maybe put a little bit more of a dampener. Importers who said, let's front load everything during June and July, they might be a little bit more hesitant. Sure, that can put a little bit less pressure on. But where the importers will fall down in terms of handling this tariff uncertainty, as I mentioned before, I don't envy them because this is almost an impossible situation to deal with.
And then so the congestion that you're expecting or predicting to happen in the West Coast ports, would we probably see that like late June, early July?
We would begin to see that in earnest late June and then during July.
All right. We'll have to keep an eye out there. All right, Lars, any other findings that you want to share this week with our listeners?
Let me just double check my notes here, but I think we are basically through all of them. I think that must be confusion enough for everybody out there, if you don't mind my saying it that way.
All right. Well, I'm sure we'll have more confusion for everyone next week. We'll unpack it together. We're in this together, so you're not alone. But until then, I hope everyone has an awesome week, and we'll be back next week. So have a great one.
Absolutely. Have a great week.
Thanks for listening to Supply Chain Secrets Podcast, presented by Nice Shacks. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.